Good morning, everyone. My name is Corey Hinkle, and I'll be your host today for the Ankerstar Wealth Morning Show. We've got a number of headlines today that we'll be discussing during the show. Nvidia's earnings, tariffs, immigration gold cards, jobless claims, and even pending home sales. Before I get started, I want to remind everyone that this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. All right, so just starting off with a quick look at the markets today. Um, the S&P 500's been bouncing a little bit green, a little bit red. Right now in the green, we love that. Now, there is that can be a little bit deceiving because underneath the surface there are some bigger moves. So looking around the market, you're seeing some moves in consumer discretionary stocks. Industrials look really good. Energy's good. Quite a few of the financials and healthcare companies look good. But then you've got semiconductors really kind of weighing the market down. And semiconductors are at the forefront of people's mind today because of Nvidia's earnings yesterday. Nvidia had great earnings and they had good things to say. But the only real kind of nitpicky thing you could find in their earnings report that could be sending the stock a little lower is margin compression. They did have their cost of sales did increase more than expected, kind of squishing those margins. And for a company doing a little, between 100 and 150 billion a year in revenue, to hold a $3.5 trillion market cap, you've got to have perfect margins. So margins are a little bit of the story there, but the numbers, the report was great. One thing to keep in mind with NVIDIA is this story, this AI story, is at a much more mature place than it was in 2023 and even 2024. Investors are starting to wonder, what does the revenue deceleration look like for NVIDIA in 2026 and 2027? And is there a possibility that that could eventually turn into a flat revenue? After all, NVIDIA is soaking up a lot of CapEx from these Mag 7 companies. And at some point, they might sort of stagnate. We don't know. Investors are wondering. Also, where are the incremental buyers for NVIDIA stock? And where does excitement come from? So again, the stock's down a little bit today. It was up yesterday. There's nothing wrong with the company. There's just some of those other things going on under the surface for NVIDIA that make it, it's trading in a range. It's not really breaking out to the upside or breaking down to the downside. It's just trading in a range. We know what we're going to get with NVIDIA at this point. Okay, moving on. There has been some volatility this past month under the surface. We haven't seen it so much in the S&P 500, but we are seeing a little bit in the S&P 500, but we are seeing it under the surface. I do want to highlight that where we are right now. So the S&P 500 is right in the 595 range. I like to look at that 200-day moving average to just see where are we at, a little bit bigger picture in that bull market that we've been in. We're still comfortably above that long-term moving average and in an uptrend. We don't have evidence that any downtrend has started. So is there cause to change course from an investment standpoint at this point? Not at all. But of course, things change by the day and by the week, and so that's something to keep an eye on. Here we go. Trump's back in the news today. So a heavy news day. Trump announced, I think early this morning, that tariffs were on, and the start date that he had delayed for 30 days for negotiations and things like that was set for March 4th. And, why not just throw another 10% on to that China tariff? Um, when talking about these tariffs with Trump, well, let me hit this. He mentions that illicit drugs are still pouring into the country, so he's very disappointed about that. And mentioned just the increase on those China tariffs that were previously announced. My opinion on the Trump tariff talk and action is that a few weeks ago on the Ankerstar Wealth Morning Show, we looked at some of Trump's actions during his first term as president. He is kind of, for good or for bad at times, but he is a man of his word. He does tend to follow through with things, and he's not so much of an empty threat type of president. So my opinion on these things is, you take him at his word. He's been talking about tariffs. He went through with it during his first term. He'll probably go through with it. I mean, he is going through with it here in this second term. The market didn't love this news, but nothing shocking here. And now something a little more out of left field, which is also a Trump news story, is this proposed gold card visa with I guess it's not really a hidden tax break if we all know about it, but they say hidden tax break. Okay. So the proposal is a $5 million gold card that would give someone US residency and would fast track them to a citizenship. And then again, not a tax loophole, but a tax benefit that these people would not be taxed on their international income. So they would only be taxed on income derived in the United States. And presumably, these people may not have much of that. So they would be tax friendly for these individuals. I have a few thoughts on this. So the Trump math here is, where does he say? If we sold, and they do present that a little over 100,000 people, high net worth individuals, could potentially be relocating in 2025. And the Trump math here is, if we sold, okay, if we sold 1 million, it would pay off our national debt. So the goal would be to use these things to pay off our national debt. And it sounds good. When you first hear about it, you think, well, let other people pay off our national debt. That sounds pretty good. I wouldn't mind other people paying off my debt. But I was wondering, at a $5 million cost, who is the market here and how big is that market? So I did find some data just from a couple of years ago. Now, of course, the North American people here presumably are mostly in the United States and probably not going to be the target market for this. So you're really, oh, and I was also thinking, if I'm going to pay $5 million to go live somewhere else, I'm probably going to need a net worth of at least $10 million to feel comfortable making that purchase. And I was also thinking, if I'm an individual, an international individual with a net worth greater than $50 million, I've probably accumulated that net worth through some form of business or some level of status that makes it more beneficial for me to stay in my home country. There's probably some level of power at those ultra high net worth levels that would not draw those people away from those countries. That's just an inference from me. I could be wrong. So I'm looking at these people maybe in the 10 to $100 million group. And again, some of those people wouldn't be very enticed. It looks like there's probably less than 1 million of those people in the world, total. And would Trump be able to draw all of them to the United States? I doubt it. I'm maybe, let's say maybe 100,000 or so. Um, is this a viable way to pay down some of the debt? It might be, but there are some odd consequences to this. Let's say he did attract 500,000 of those. Again, it looks like there's only about 1 million people around the world who would even fit in that target audience. But here's something that Moody's put out just this past week. So this is the share of United States spending by income group, by earning group. And if you look over on the right side of that chart, you can see that as of 2025, about 50% of consumer spending is the top 10% of earners. And these people he's drawing with these gold cards would fit into that bucket. You'd be adding quite a bit of demand into the economy. And I wonder, does that create an inflationary pressure? And if it did, would that be worth it? Would the pros and cons of paying down the debt in that way really be worth it? Those are just some of my thoughts. Very interesting news. Very interesting take. Okay, really quick. Weekly jobless claims did jump. They mentioned that the correlation is not really to all states with a high number of federal employees, though Washington, D.C. did have a large jump of 26%. And, that's not a trend we would like to see continue for very long. And lastly here, pending home sales dropped to the lowest level on record in January. I have a lot of thoughts about this, a lot of thoughts. So we know the statistics show that about 40% of homes in the United States are mortgage free already. There's also, we know, a group of people who took out a mortgage that didn't need it to take advantage of those low interest rates. So let's just assume, let's just call it 50% of homes in the United States would be, they either are paid off, it would be very easy for a family to pay off. That is a large group that has no concerns about home prices. If a home that they desire is going up in price, it's also representative of their own home going up in price. So their only monetary consideration in making a change from one of those homes to the other would be whatever the tax implications are, or the property tax implications. But if you're in the property taxes are similar, those people are totally not concerned about home prices at all. Even though maybe they feel like, oh, they stroke their ego or something if they feel that their home value has gone up. Now the other group is the other half of the home buying market is totally segmented. You're going to have first-time home buyers, aspirational home buyers, people acquiring rental properties, things like that. That's totally segmented. I don't know that these slow sales are really reflecting that you're going to see a large drop in home values. I could be wrong on that, but that's just kind of my opinion on this. I think things are slow because a lot of homes are paid off, and maybe people are feeling like they don't need to move because they are locked into a low interest rate, or they refinanced, and it's not worth making those changes right now while rates are high. And if rates fell, then home prices might actually have upward pressure again, and that's kind of why rates aren't falling. So I don't know that there's some impending doom here, and I also don't know that things will change much from this dynamic. So a busy news day. Thanks for watching, and we'll see you back here tomorrow.